Welcome to ShortView Trading. This is your morning market hit for Friday, 9th of April. What matters today for traders? Well, momentum in markets has remained to the upside this week, with a number of indices breaking out to new highs and with tech at the center of that strength in markets. You can see, for example, the S&P 500 on this chart moving out to a new high. The Nasdaq has rallied back to its highs from February, with that strength in tech largely reflecting and consistent with lower bond yields this week, which have started to roll over. While the other key headwind, of course, for equity markets has been the sharp move lower in the dollar. You can see that on your screen now. Interestingly, and while the tech-centric areas of the equity market have been strong, the cyclically sensitive and classic reflation parts of the equity market have been quite weak. The Russell 2000, for example, has rolled over, and similarly, if we look at the Dow Jones Transportation Index, it peaked with bond yields and rates last Friday on that strong non-farm payrolls number, and since then upside momentum has faded somewhat. And in other parts of the world, take a look at the DAX in Germany. It's basically flat this week, while in China the Shanghai Comp is at similar levels to late March. So it's been a tech-centric rally in the past week, and as a result, the breadth of the strength in markets has been fading. And that's the message of this indicator, which measures the advancing stocks relative to the declining stocks on the New York Stock Exchange. And as you can see, it's just starting to roll over from high levels, which is typically what happens ahead of major local highs and just ahead of some give back in markets. We use indicators like that one to take a view on markets and make a 1 to 2 week recommendation, long or short, on US equity futures, and we do that every day in our daily trading publication, available on the website to subscribers, but we also offer a 7-day free trial. Have a look at that publication to see how we're trading markets. So what have we been watching this week in terms of macro data? Well, after that strong non-farm payrolls number on Friday, job openings came out on Tuesday afternoon, much stronger than expected, with some chatter in markets this week that wage inflation should start picking up. You can see from the chart, wage inflation usually follows job openings. We also had Chinese CPI and PPI out this morning, both rising sharply and above consensus expectations, which naturally is consistent with other inflation readings in major economies, which have been surprising to the upside in recent months. That was your morning market hit and roundup for the week. Do follow us on YouTube, search under ShortView Trading, join us on Twitter, LinkedIn and or Facebook. Thanks for listening.